What if I told you that your biggest mistake in stock market investing is not buying the wrong stock, but holding too many stocks? Most investors believe this mistake is actually called safety. Almost every retail investor I meet holds 20, 25, sometimes even more than 30 stocks. And when asked why, the answer is always the same. Someone told me diversification is important. But very few people stop to ask how much diversification is too much. Here's the uncomfortable truth: a jack of all trades and a master of none almost never wins in the stock market. As a retail investor with a full time job, you simply do not have the bandwidth to track, monitor, and understand 20 plus businesses deeply. In my experience, even a very committed investor can accurately track not more than 7 to 10 stocks, and that too with serious discipline. Most investors think more stocks means more safety, but real safety in the markets doesn't come from numbers, it will come from clarity. The only way I personally feel safe in the stock market is when I select the right businesses, identify their future growth triggers, and then monitor those triggers carefully. When you know what must go right for a company, volatility doesn't scare you anymore. Think of it this way: trying to track 25 stocks seriously is like trying to master 10 professions at once. You don't become great at any of them, you remain average at all of them. And markets don't reward average understanding, markets reward depth, not width. When you hold too many stocks, you don't understand any of them deeply enough to hold through the volatility. And the moment price falls, doubt enters. Not because business is broken, but because your conviction was shallow. Warren Buffett said it beautifully: invest in a small basket and watch that basket carefully. Notice the word watch carefully. That's not possible when your attention is scattered. Serious investors don't ask, what else should I buy? In fact, they ask, should I add to my existing best ideas or my winners? Should I cut my losses if I was wrong? Or did I enter too early? That requires understanding, not excitement. This is why structured investors focus more on elimination. They build a focus list: less noise, more clarity, better decisions. If this resonates with you today, you are not here to gamble. You are here to build something really meaningful in this investing world. Keep on with that journey.